Good morning, everyone. It's Tuesday, May 15th. Let's go ahead and get some perspective here in the market. Long term, we're still looking at trend up. Midterm, we're still looking at a trend up. Short term, we are looking at a trend down. I'm going to get to what's going on right here in just a minute. This trading lane, again, we're expecting the market to, if it does break to the bottom, come down here to this 96.20 level. Right about here. If it does get going fast, we're looking at some support down here, which is right in the 1.9, I believe it's 425 or so. So we've got a range of prices for the targets for the market to come down. We're also trading in a very tight range. You notice that I've extended the flag now. I'm really considering this more of a short-term trading lane than a flag. The flag, in my opinion, really should have cut off right about there. I don't have an exact equation for you for how long the flag should be in relationship to the flag pole. But really, if a flag does continue for a while or a pennant continues for a while, it's indicating that the decisiveness is gone out of the market, and now we're getting into a channel. Of course, you can see that the pound, the barrier really was this $2 level, which was the 15-year high. That level just could not hold. So we've got to be ready for the market to probably make another run up here and then take off to the downside. Just as a precaution, not as a prediction, okay? So let's take a look at what's been going on in the 4-hour here. There's some important momentum indicators that I want you to be aware of. Notice how deep the retracements were. So the market moves down and then pushes up. Look at how deep that is. The market pushes down and moves back up. Look at this. I mean, the retracements are deep back against the prior trend. This is how you can really tell that the market is bullish. Look at this. The market is pushing down, and then at this point, remember when I said the market was trading more sideways because we had lower highs and then boom, popped up here to a higher high. Now look at what's happening. The market drops down. Look at how shallow this is. I mean, just look at the difference here between the peaks. Okay, market pushes down, finally gets some bullish mode again, another bullish mode. You're thinking another bullish mode. So here, remember I was saying we might be getting the breakout. The reason why I was saying that was because you can see here higher highs, higher lows. Now, look at how the market comes down and look at how shallow this retracement is. This retracement over here was about as shallow as this retracement here. So you can see that on this first retracement over here, there was bearishness in the market. Bearishness is coming back into the market. So what do we need to be watching for? Well, the last time that we had this kind of bearishness was right here. The market pushed down, retraced very shallow. Didn't even get up to the 0.382 retracement. So if we take a look at this here, look at that. Barely got up to it. Here, doesn't even really reach it. Came very, very close, but doesn't even reach it. So we're getting bearishness back. What we've got to watch out for is the market making another run like this. So we do have to be ready for a trading lane to form up. In fact, if you recall, I was warning you of this as well. We're going to possibly get a flag. We've got to be looking for the same type of thing. At this point, it's going to be a flag, which may look something. Like this, coming downward. This thing might actually start to narrow into a pennant. We just have to be ready for this. The key here is going to be this prior week's close as resistance. But again, right now, there's not a lot setting up. The news really put some volatility into the market short term, but nothing's coming to fruition. Nothing really setting up. But you've got to keep your powder dry. Remember your logical points. Remember where you are in the market, and always be on the lookout for these setups.